Hi everyone, welcome back to Be Rich. It's me, Vinod here, and I hope you're doing well. I hope you had a great day. I hope you managed to get some investing done today. Today, of course, the market opened as expected negatively after Trump had said there's no way the tariffs are going to stop. They're going to come into full effect tomorrow, that is the 4th. For them, that is today, it's already the 4th for us. So it comes into effect on 4th of March, and China and Canada and everybody else have already said they're going to slap tariffs back. So the trade war begins. Has this happened in the past before? Yes, it's happened. It happened way back in the 1930s and in the 1900s. It's happened. An American president did this. And then in the 1930s, Hoover did try to do this. After the stock market crash, which led to the Great Depression, he tried to put tariffs into place, trying to protect the American manufacturers and the American farmers. And that didn't work. It lasted around for 4 or 5 years. Then Roosevelt came around and he renegotiated the tariffs, and most of those tariffs disappeared. This is even worse now because we are living in a world which is far more interconnected than in the 1930s. Economies are far more interconnected. So the implications of a tariff now is not going to be good for anybody. But it has been decided. So we'll have to wait and watch, see what happens. Of course, we are not in the same situation as the Great Depression. We have central banks and we have guardrails in place. Yes, at worst case, we might have a recession where there's an economic slowdown, but it will not be as terrible as it was during the Great Depression. If you are seeing those clips online, those clickbait clips, don't worry. Yes, it is going to be painful. I'm not saying it's not going to be painful, but we will survive this. We will get through this. Maybe a little bruised here and there, but somehow at the end of it, we will get through. Talking about getting through, the stock market is opening up more and more opportunities on a daily basis. My brother was talking about Xylus. There's two companies. One is the Zydus Wellness and Zydus Life Science. There's a slight confusion on which one he was talking about as an opportunity. It is the life sciences. Life sciences owns most of wellness. So by buying life sciences, you are indirectly buying wellness too, which is the majority shareholder of wellness. So there is where the opportunity is. Because by owning life sciences, which is a pharmaceutical company, you're also owning wellness, which has a lot of great brands under it. So right now, the market is giving you an opportunity in terms of price to value. If you look at Zydus Life Sciences compared to all the other pharma companies which are there to be looked at, that means our list, so-called PATAS list, which you guys like calling it, is growing. There are more companies which are coming, which were considered probably diamond needles, as Anand would say, now are becoming more available to retail investors. But I would still say, please be cautious. Just because something, looking like it's exploring, coming down to earthly realms, it doesn't mean you need to right away stand up and try and grab it. If it is within your range, Tiffin Coffee range, and if it is something you're interested in and you're being looking at for some time, then definitely, of course, consider it. Other than that, there's no reason to, throw the baby with the bathwater, as they say, and change your strategy completely. Let's say your budget is only 500 rupees a day, or let's say it's 200 rupees, or your whole budget for the month is only 2000 rupees. And suddenly this has happened, the first of the month, you've finished all your budget and you're like, oh my God, now what do? You don't have to borrow and invest. This will continue for some time. The way it's going right now, it's going to be with us for some time to come. The market is not going to reverse course immediately, though there are talks of it in the media saying if they give tax cuts to capital markets where foreign investors are not being taxed for selling in India, maybe that will reverse the course. They're not only selling in India. If you see the data, they're selling across the globe. If you saw the Japanese market today, it was hammered. If you see all other Asian markets, they were hammered. The foreign institutional investors and foreign portfolio investors are all pulling funds across the markets, across the globe, because no one really knows how far this trade war is going to go, what is the full extent of it, what is the damage which is going to happen to each of these economies, and how is it going to affect companies, because all these companies are global companies. You saw in the case of Reliance, it's been hammered. Titan was hammered today. Titan is down. Is it, at earthly realms? No. It's still very expensive. Just because you read a headline saying the company is down, to 52-week low doesn't mean you should immediately think it has become a value buy. It doesn't work like that. Some of these companies have been pushed to lofty realms and they've been there being pushed further and further for the last 3-4 years. So if you really look at it, they are still frightfully expensive in the terms of valuations we as value investors look at. I know we tend to fall prey to the noise and we believe in brands and we find some kind of fan moment when we hear about a certain company which we thought we'll never be able to buy, and now it looks like we can buy it. This is the time you try to be a little more astute in your analysis and keep your emotions in check and keep investing in a cool manner and stay in the stiff and coffee range and not go further than that would be my strongest advice, because these markets are going to be volatile for some more time to come. They're not going to reverse trend immediately. Even yesterday, when it was supposed to be a dead cat bounce, it really did not bounce. And they're saying there's a tremendous support level at 22,000. I don't know all the support level nonsense. If you look at our companies which we have been looking at for quite some time, they're all in very much in territories of being, I would say, not bear, but close to it. Some of them, yes. Some of you may argue Natco has corrected enough, but Natco is a different breed of fish. It is not like your regular, it's a cyclical business. Like I've done many videos with Dana and my brother have spoken about it. Yes, there will be pain in Natco, but it's cyclical, and it does recover, right? And we have spoken in great depth about it. So keep all this in mind tomorrow when you see an opportunity in the market. As far as market news is concerned, as expected, Honda has now replaced Hero MotoCorp as the #1 wholesale two-wheeler seller in India. This has been something Anand has been saying for a very long time. That's why for those of you who are interested in stocks in the US and Japan, he had said Honda is a great company to consider because their valuation for Honda in Japan is very, very cheap. And if you see the way they're dominating slowly in the Indian market, they're doing this across the globe. So you can expect Honda to be a great buy if you are looking at US and Japanese stocks. As far as Hero MotoCorp is concerned in India, it has corrected for those of you who can afford it, because even at this price point, it is very expensive for most people who are doing tiffin coffee range investing. So if it is in your tiffin coffee range, or you're only spending 2,000 rupees or 3,000 rupees in a month, if you're really been keen on Hero Motor, you can definitely look at Hero Motor. It's not immediately because of this news of Honda taking the place, Hero MotoCorp is not going to disappear. They will battle through and they will come back. These positions between #2 and #1 differences are wafer thin in volume of vehicles if you look at. So keep that also in mind, like what I spoke about Tata's yesterday and Tata Motors. This is also true. Talking about Tata's, the IPO is around the corner, they're saying, for capital. And they're planning to raise, I think, around $11 billion. And that's a lot of money they're planning to raise. So this is going to be an interesting IPO. Let's wait for all the information to come is what I would say. Doesn't mean you stop investing and you bank on this coming. Remember, it's an IPO. You have to subscribe to it, and then you have to keep your fingers crossed and hope it gets allotted. If all of it makes sense, and then it comes as an investment in your portfolio. So there's lots of ifs and buts. So my advice would be, yes, it's happening. It's interesting. But let's wait. Continue doing whatever we are doing on a daily basis. And the most important thing which I keep repeating, which a lot of you seem to be getting confused, is we are never here to put a lot of money in the market. If you are trying to put a lump sum in the market, this is not the strategy to do. You cannot just go buy a stock today thinking you have hit a low. Like I said in yesterday's video, if you bought Tata Motors at 1,000, then sell it at a loss at 700 and re-enter the Tata Motors at 600. All these kind of strategies are crazy, and it's not going to be doing your mental health any good if you do this, because you won't be able to focus on living your life or doing your work or doing anything else. Constantly you'll be checking the stock market, looking at your portfolio, feeling painful, and this is a terrible cycle, mental cycle, which you'll be putting you through. Rinse wash cycle, which non-stop, it will keep running. So don't do this. This is why I keep saying tiffin coffee. If you're an expert and you know what you're doing, then you're probably not even watching my video. But if you're new, like Dana, the rest of you cohorts who are there, Gen Z, and people who are in my age who are just starting, keep it simple. Don't make it complicated. There are many companies which are there, which we've been talking about for a very long time, which I beg you to consider. But like I said, in tiffin coffee ranges. So today the market is of course corrected again. There is more opportunities like before. There is very difficult to say buy this or that because it's purely up to you now. There's so much available. So what I really want to stress on is the amount of money you put daily in the market, not to cross that threshold. I am there on Instagram talking more about this. I'm glad that some of you picked up that we said and made a mistake in mentioning the Zydus company. So I hope that is clarified. Life sciences is what you should be looking at and not the wellness. That I wanted to get out to you guys because I had been speaking about it on Instagram, but I didn't get an opportunity to say this in a video, so I wanted to get it out. Other than that, have a wonderful day tomorrow. the markets probably will be continuing to correct because Trump's tariffs would come into effect. China's retaliatory tariffs will also kick in, with Canada's kicking in. And with him pausing aid to Ukraine, that spat seems to be exploding and becoming bigger and bigger. So if anything, geopolitically speaking, there is more and more tension being stirred up. This is going to create more flight of capital. This with the crypto, whatever he's trying to do with crypto, which I don't even understand what he's trying to do, all this is going to lead to more pressure on the market, more volatility. So as these days go on, we are going to get more and more opportunities as we go further into this year. As far as gold is concerned, gold is always a safe haven. If there's any correction, good for us, accumulate. Same thing with gold. If you have a lump sum money which you don't need for a year or two, you can store it in gold. Other than that, gold is not something, it offers more than that in the short term. But like I said in the previous video, at least 10% of your portfolio you should have in gold. So if you're spending 100 rupees every day in the market, 10 rupees put it in gold, right? If you're reallocating your portfolio, if you're looking at your portfolio overall, deciding what to do currently, make sure that 10% is in gold. That will give you a good hedge in any kind of downturn and volatility. Anand has said this in another video too, where he said, those of you who have been following him for 2 years, those of you who followed him ardently and put money also in gold, will be well compensated for any losses you might be feeling in the equity market by what is happening in gold. Nothing more to say. See you tomorrow with some more news and some more information and some more motivation, I hope. Thanks for watching Be Rich with me today. Have a wonderful evening and see you again tomorrow. Bye.